Jamie, take us through what's in budget 2022 for Canadians. I guess starting with the tax for high income earners.
Yeah, so there's a perception, at least from the government, that certain high income earners, and they classify that as the top 0.5%, people making over $400,000 a year, are not paying the fair share of taxes. And as a result, what they're going to try to do over the months ahead is look at a new alternative minimum tax regime. I already have an AMT in Canada, but apparently it's not effective because some of these individuals are not even paying a 15% tax rate. And that's because of things like half tax capital gains, Canadian dividends, a tax credit on that, various deductions and things like that. So what they're going to be introducing, we don't have those details yet, is a new form or new regime for AMT, the alternative minimum tax, to ensure that those individuals pay at least a certain minimum level of tax.
Now, financial institutions have to report RRSPs and RIPs. What's different this year?
Yeah, so what they're introducing now is a new regime similar to the TFSA regime, where financial institutions will not only report withdrawals from an RRSP or RIF, of course, on the T4 slips as taxable, or contributions to the RRSPs, but they're also going to have to start reporting the fair market value of the RSP and RIFs as of December 3rd to 31st every year. They already do that with TFSAs, which much more extensive reporting, but this is a new regime. It will allow, again, the CRA to look at maybe more higher balances or suspicious activity in very high value RSPs and RIFs.
Tax measures for homeowners. Tell us what's in the budget.
Okay, lots of stuff there, some small, some big. Let's just start really with the big one. And the big one, of course, is that new first home savings account. The ability to put in $8,000 a year for 5 years, $40,000, the opportunity to save that money for the purchase of a first-time home. The nice thing about the plan, of course, is that the contributions to that plan are tax deductible. The income, of course, is tax-free inside the plan. And when you take the money out to buy a home within a 15-year period, you don't have to repay it like the home buyer's plan, and it also comes out tax-free. So this will really help Canadians who have never owned a home, or at least haven't owned one in the previous 4 calendar years, to be able to save for that down payment, to be able to help finance that first home.
Jamie, we're going all across the board here in that 300 some odd page budget document. Tell us what's in there for medical expenses.
Yeah, so there's a variety of medical expenses that are eligible for the medical expense credit. What they've done now, and they've been talking about this for a while, is they're expanding the definition of eligible medical expenses to include specific expenses for different ways of parenting in terms of like things like surrogacy or paying for ova and sperm and things like that. So there's an expanded list there, making it easier and more accessible for people to be able to get a tax break for the cost of trying to have a child through other means.
Small businesses, what's in store for them?
So small businesses currently benefit from a low corporate tax rate on the first $500,000 of income. Unfortunately, if you're a big small business with capital over 10 million, you start to lose the small business rate on a straight line basis between 10 and 15 million. What they've done now is expanded that range dramatically to allow a lot more medium-sized businesses to be able to claim the capital gains exemption by expanding the range of taxable capital on which you start to lose the small business rate. So certainly good news for larger small businesses.
What else was in there that's on your radar? What wasn't in there?
Yeah, well, of course, what wasn't there, of course, what people were worried about was the capital gains inclusion rate. No changes to that. We're still at the 50% inclusion rate. Of course, no mention of anything on principal residences. They did mention, of course, the anti-flipping tax, something that we've been monitoring very carefully. If you buy a home and then sell it within 1 year, that will be taxed as business income, not even a capital gain. And that will be effective starting next year. And the only other thing that's probably worth mentioning is for charities, they're now bumping up the disbursement quota from 3.5% to 5%, meaning a charity now must give 5% a year of its assets they're not using in charitable activities and spend that on charity. So again, this is something that was predicted because they've been studying this for a while, but now we're seeing this as a reality starting next year, going up to that 5% disbursement quota.